Hey, I'm Ann DeVenzio with another Realty Reelz educational video. So we're pleased to have with us Frank Berriz, President of American Coast Title Company, to answer a few questions about the subject of title insurance. So Frank, tell me, what is title insurance?
Well, Ann, basically title insurance is protection against defects in the acquisition or encumbrance of real estate. So when you're purchasing property or using it as security for a loan, that's what we insure.
Is title insurance necessary for all purchases and refinances?
Since for most of us, the single largest purchase we make in our life is our home, the product of title insurance is a very good investment to protect the ownership of that property. It's not a legal requirement. However, I really can't think of too many circumstances where anybody would invest in real estate and not get the protection of a policy of title insurance. And as it pertains to refinances, there are no lenders that I'm aware of that will make a loan using property as security without requiring a policy of title insurance to protect their investment and their loan.
What are the possible problems that can arise if I do not have clear title to a property?
The most obvious and basic problem that could arise is that you might purchase a piece of property thinking that you were buying it in its entirety and not realizing that there might have been another family member or someone that had a claim to that property, and now you're acquiring the home subject to the interests of that individual. Some of the other issues that arise is there might be forgery in the transaction that we insure against as well. There could be tax liens that have not been addressed. So in many cases, people feel like, well, I'm buying it from someone I know, and they feel a sense of security that just isn't warranted because they may have that person's brother, sister, mother, father having an interest in that property that isn't accounted for. The chain of title guarantees we ensure the fact that the right people are selling the property to you as a new buyer.
What are the most common ways to hold title, and do you recommend any in particular?
Well, we're legally not allowed to recommend because that is at the discretion of the investor, whoever is buying the property. So that advice usually comes from either their attorney or their CPA. But in terms of the common ways to hold title, joint tenancy is probably the predominant way that California owners acquire it. That's right of survivorship for a spouse. Then there's tenants in common or community property. But again, that is really at the discretion of the buyer as to how they want to acquire title.
How are fees determined? In other words, on a purchase, what does a buyer pay and what does a seller typically pay? And what is different about a refinance loan?
Well, in California, we're required to file fees with the Department of Insurance to ensure that there's no discriminatory pricing that goes on. As it pertains to a purchase transaction, the general rule of thumb, and it's all negotiable, but the general rule of thumb is that the seller pays for the owner's policy of title insurance protecting the new buyer, and that the new buyer pays for the concurrent policy of title insurance, loan policy of title insurance, to protect the lender on the purchase money loan.
So normally, how long does this coverage last?
An owner's policy of title insurance lasts as long as the owner is in possession of the property. It terminates upon sale of the real estate. A lender's policy of title insurance will last for the length of the loan. Upon that loan being paid off, that coverage is terminated.
If I refinanced or purchased my home, say 6 months ago, why do I need to pay for title insurance again?
It's a very common and legitimate question. The reason that it is required is, again, an owner's policy of title insurance is strictly for the protection of the owner, the new owner of the property. If you are now refinancing, you're paying to insure the new lender on a totally different loan amount, a totally different loan, and the period of time from the purchase to the new loan is exposure that has to be covered by a policy of title insurance.
How does title insurance differ from casualty insurance?
Well, insurance is a matter of risk management, and the distinction between casualty insurance and title insurance is in casualty insurance, you're insuring against future events that might transpire somewhere down the line, auto accident, fire in the home, whatever it might be. That's why they have annual renewals. With title insurance, the risk management is on events that have transpired up to the date that we insure. So we have the advantage of evaluating the risk based on the chain of title and the transactions that have taken place prior to issuing our policy of title insurance. And as such, that's why we only charge a one-time fee that lasts for the duration, because future events are not covered under a policy of title insurance.
Well, thanks, Frank, for your input.
My pleasure.